Now, growth in retail rents in Hong Kong will slow to 8% next year. That's according to Richard Ellis, a commercial real estate firm. For the first 11 months of this year, retail rents have risen nearly 24% in Hong Kong. Well, for more, we're talking to Morgan Parker, who's president of Taubman Asia. The company is moving into Singapore, hopefully at least, in a joint bid with Harrah's Entertainment for a casino site. But much more is expected from this part of the world. Morgan, now, you don't own anything in this part of the world at the moment, but you have started pre-development phases. What have you got underway? Where are the hot spots in Asia for your business?
We're really focused on the key economies in Asia. You have 4 of the world's largest economies in Asia, in Japan, Korea, or South Korea, China, and India. And they really present as very compelling opportunities for us as a retail developer. You have this intensifying level of consumerism, growth, and these communities in these countries are really looking for better shopping environments and access to great brands. So for us, they're really strategic markets that we'll continue to focus on.
Okay, it was reported earlier, last month in fact, that you may invest in 2 Asian projects worth about $500 million. Now, I have to assume that Singapore is one of those. What was the other one?
We've commenced fairly significant pre-development activities in South Korea. You know, South Korea is a country of 55 million people, and today it really only has 2 shopping centres, which we see as a fantastic opportunity to create more. And there's a great deal of consumerism taking place in South Korea. There's a great propensity of foreign brands, all looking to be accommodated in world-class environments. So that jumps out to us as a great opportunity. And we're involved in the new Songdo City project, which is one of the world's largest private development projects. And we are the retail partner for that project, with approximately 10 million square feet to be developed over the next 10 years.
Now, as you point out, shopping malls, the way the US understands them, are not necessarily that prevalent in Asia. I mean, people love shopping malls. They're all over Hong Kong. They're all over Tokyo. But people also like their fresh food markets. They like to see their chickens being beheaded or their fish being sliced up. Are you able to incorporate that into the things you do?
I think the key is that the retailers themselves are incorporating those different concepts. You know, the leading retailers across the region have identified the consumer behaviours of the local communities and are seeking to incorporate them in new modern formats. By the same token, you know, the communities in Asia are evolving very, very quickly, and what we're finding is there is more of a universal consumption pattern, a universal appetite for brands, a universal way of shopping. Things are truly becoming more and more similar everywhere you go.
How to make money out of it then at the moment? There's a lot of competition. I mean, the biggest IPO of Real Estate Investment Trust was here in Hong Kong. It was with the Hong Kong government. But we've also had Cheung Kong Holdings with its Prosperity REIT. There's been Suntec REIT and everything else in Singapore. There are more coming onto the market. Simon Property Group is involved here, buying Chelsea property for its Japanese malls, and it may build in China. Walmart and Morgan Stanley investing $100 million in Hangzhou. I mean, how are you going to make money?
Well, it's true. Asian real estate markets are very, very competitive. But what we think we've done over the last 50 years is establish a level of integrity and credibility with the retailers. And essentially the retailers are the king of the industry. Where retailers want to expand, that's where we need to be. And all of the examples you cite are ones where retailers are looking to expand to access new communities. And when a retailer wants to expand, we simply follow. And what we're doing is working with great retailers who have aggressive, but at the same time prudent plans for Asia. And as they expand, we'll be there to satisfy that demand.
Now, funds from operations is going to be rising to about $2.30 a share next year, up from $2 this year. This is your own company's forecast. How much is going to be coming from Asia?
Well, I think we're trying to develop a pipeline of projects across the Asian region which can augment what we're doing in the United States. You know, we have a portfolio at the moment of 23 super regional and regional shopping centres, which collectively are the most productive retail property portfolio in the United States. So the challenge is to add to that in an accretive way. And we're adding projects in the United States, and we are trying to duplicate that pipeline here in Asia by adding sustainable, profitable, high-quality shopping centres.
Are you seeing a slowdown in the US at the moment? I mean, there's some concern with interest rates and oil prices quite high that retailers may start to suffer. Figures haven't shown that yet, but there is concern that may happen.
I think it really accentuates the importance of having quality real estate. when you see a slowdown in retail sales, it's typically the more substandard shopping environments that are first to suffer. We're very fortunate that we have high quality properties and they dominate their trade area each and every time. So retailers tend to be quite successful in our centres. So we're yet to see that type of effect across our portfolio. So in a sense, it really plays to our strength of not necessarily being the largest, but focusing on having the best quality, sustainable properties.
Okay, Morgan, best of luck with the venture in Singapore. Best of luck with your Asian expansion as well. Morgan Parker at Taubman Centres, or Taubman Centres, depending where you come from, joining me in the studio. Just ahead, Tokyo Star Bank plans expansion with the war chest built up in its initial public offering. We'll hear more from the bank's chief executive, Todd Budge. That's coming up just a couple of minutes.